Hello and welcome to an all-new episode of the Bitcoin News Show right here on the CryptoCast Network. Thank you so much, ladies and gentlemen, for tuning in for wherever you are, whether that is the evening or the morning or wherever you guys are. We really appreciate you tuning in. And so let's just go through our links real quick. We, of course, have our CryptoCast.network website where you guys can find our YouTube channel, Twitter, Instagram, iTunes, and RSS. And we have our shirts that we're sharing there to support the channel. And, of course, we display our QR code at the bottom as this is a community-supported YouTube channel by viewers like you. And of course, we're still doing our programming with Bitcoin.com interactive 2-day workshop where we'll be talking or teaching C# developers how to work with Bitcoin, specifically the NBitcoin library created by Nicolas Doye. And both him and myself will be instructors for that. And we're going to be trying to take this around the country to San Francisco, October 13th, and Seattle, November 3rd. So with that aside, let's stop the screen share, get into your Quitbit section today, guys. We have a lot to go through. There is a good amount of stuff on here. So let's just get through this real quick so we can introduce our guests. So first of all, I just want to share with the audience that I did receive my bill fodel, and I want to share that with everybody really quick to show that out. This is really, really cool, guys. This allows you to store your hardware wallet in metal, which is pretty awesome. You guys can check out the website, billfodl.com. And actually, the guys gave me a discount code for you guys to use. If you want to get 10% off, just use the code Vortex. It's not an affiliate or anything like that. It's just 1 week promo code for you guys to enjoy. And now in a recent article by Mr. Dan Hedl, he explores Bitcoin's energy use. And according to Dan, Bitcoin's utilization of the electoral capacity consumes magnitudes less electricity than existing fiat systems. And again, guys, we've been trying to say this for a while, but make sure you definitely check out this article. Is it an amazing article by released just recently by Dan? A lot of good facts and figures on there, and again, just shows that the traditional financial system takes way more energy than Bitcoin. And then Mr. Alex Bosworth, we like to mention him a lot on the show. He's over there at Lightning Labs. He gives us an update on the latest LND optimizations, where he says, quote, big CPU wins among many other optimizations being realized in the 0.5 LND release. So check that out, guys, because again, when you're running Core with Tor and LND, they saw the CPU drop by 5x. That's 500% on the latest version of 0.5. So very cool optimizations for the Lightning Network continue. And then Mr. Matt B has tweeted out a video demoing the conversion of signed transactions into Morse code. You guys got to check this out. It's really cool. Again, just saying that the Bitcoin is just information. You can put it out in any way you want. Morse code, radio waves, whatever. It's pretty hard to stop Bitcoin like that. And then Lightning Labs, speaking of Lightning Labs, they did just release their new version of their wallet software featuring an overhauled user interface and a brand new backend designed for mobile. We just did an interview with Tankred over there from Lightning Labs, so check that out. We did a Deciphered episode of that on the CryptoCast Network, so check that out. And of course, guys, as always, all the links are in the show notes below. Samurai Wallet has released Paynim.is, which is really cool, guys. Well, you can get your free Bit47 reusable payment code right now. It's really cool because it allows you to accept Bitcoin without publicly showing your address. So again, just another win for privacy. Really cool. More and more work being done in the privacy sector by Samurai Wallet. We really appreciate their continued work on that. And then the U.S. judge recently ruled that ICO frauds fall under securities law. As as one of our guests that we'll see today, definitely probably believes that judge was very accurate, guys. We've been trying to tell people for a while that most of these tokens are going to end up being securities. And now this this is an interesting bit of news here. Some major crypto companies form a DC lobbying group. This is made up of companies like Coinbase, Circle, Digital Currency Group, Polychain Capital. There are a few of the participants, but I just wanted to get this news out there to maybe even do a bit of a warning, a bit of a PSA, because again, these guys, we saw what happens when they got together with the Segwit 2X last year. Now they're going to get together to form a DC lobbying group. So probably not good things are going to come out of that. So I wanted to make everybody aware of that. Make sure to check out the article and that. And that's what happens. The bad guys, when they lose, they go back, lick their wounds, and they try again. So we always have to be vigilant. And then in an effort aimed at bringing institutional money into the crypto space, BitGo just received regulatory approval to have custody access for crypto assets, to actually custody these crypto assets. And this is one of their efforts at bringing more institutional money to the space. So definitely check that out. BitGo secures many people many companies in the space. So check that out. Then Michael Novogratz apparently has called a bottom in the market. So if you guys are sick of this bear market and you like Michael Novogratz, well, then you should have some good news. So pretty happy there. Personally, I still think we got a few more months to go. I think we're gonna, not start stair-stepping up again until either this fall or next summer. We have a lot more scams to weed out. And then finally, another samurai topic here. Samurai, again, guys, they just keep continuing to push privacy. They said that they just now have a brand new feature called Stow Away Spend, where it shows neither output displays the true spend amount, which is in effect stowed away via a trusted cooperation between two wallets. So again, neither outputs display the true spend amount. That is pretty powerful, pretty awesome stuff. More privacy technology coming to Bitcoin. So really, really amazing stuff, guys. So without ado, that was your quick bit section, guys. I hope you enjoyed that. We have now going to introduce our amazing panelists that I'm so proud to bring you guys today. As always, every Sunday, I try to bring you guys people that are in the space, people that are knowledgeable, people with skin in the game, and I think I've done that again here. So without further ado, let us introduce our panelists. Mr. Stefan Livera of the Stefan Livera podcast. Thank you so much for joining us, man. How you doing?
Excellent. It's great to be back on the show again.
Yeah, we love having you on, Stefan. You kind of stepped up today. We asked you the last minute to come on, and you said yes. So we really appreciate you, Stefan, for stepping up. Mr. Francis Pulio had another engagement today, so he will not be joining us. But Stefan stepped up, so we thank you for that, Stefan.
All good.
Yes. And then we have here we go. Where is he? There he is, Mr. Nathaniel Whitmore. This guy is pretty cool, guys. He's a Bitcoin enthusiast, but as of recently, I've been really enjoying his crypto Twitter recaps, his Sunday long form tweets. So definitely check that out, guys. Make sure you follow him. And of course, everybody's information will be on the show notes below. But Nathaniel, how you doing today?
Good, man. Thanks for having me.
Yeah, man, I really appreciate it. This is your first time on the show. So
I know. I'm excited.
Hopefully we'll have a good time. Hopefully you've been watching the show for a little while, maybe.
I have. Yeah, absolutely.
All right.
No, awesome. I was excited to see Stefan here. I've been listening to the podcast religiously, so this is great.
Awesome, man. We're definitely glad to have you. So thanks again for those tweet storms, man. We really appreciate it. And finally, ladies and gentlemen, the one and only, the special guest for the show today, Mr. Kevin Pham. Kevin, how you doing, man? Oh, no. We got you muted, bro. I think I muted you on the software, so you have to go to Google and unmute. But yeah, man, that was my fault because there you go.
Yeah, no, I think a lot of people mute me on Twitter because I tweet so goddamn much. So you're not unique. No, I'm feeling great. Bitcoin dominance is going up. Bitcoin maximalists are right again, and basically. People are becoming Bitcoin maximalists whether they like it or not.
That's right.
They got to eat. So that's kind of cool. That I think that's the thing about Bitcoin maximalists. I think that we've figured out is that we figure out that you don't have to like us, but you still are forced to agree with us. And I think that's the cool thing about it. And if you really want to see who's really smart or not, you'll just be a kind of very unpleasant person. But if they still think you're right, then they're usually a smart person. They can see the signal through the noise.
There you go. Maybe if they might not like us, but they might not have to agree with us. But I think that they definitely can't ignore us. That's for sure, Kevin. Cannot ignore Bitcoin. So thanks again, man, so much for being on the show. We really appreciate it. We're gonna be talking about a bunch of finance and economic stuff today, Kevin. So I'm looking forward to getting your thoughts on that. So let's get right into the first topic of today. Here we go. Scroll down. All right, the unflippening, ladies and gentlemen, the unflippening. So this is something that might have been coming for a while. Maybe some other terms for it are the floppening and some other good stuff. But I wanted to get into this a little bit today, guys, to see what you think. So basically, the Bitcoin's resurgent dominance, is kind of showing the world that Bitcoin is king again. So let's go with Stefan first on this, and then we're going to mix it up with the different with going back and forth with people. But Stefan, let's get your take first. We've recently seen the Bitcoin dominance market, start to go up. We've seen the Bitcoin dominance go all the way up to 58%. So let me ask you: is this a sign of the world understanding that Bitcoin really is here to stay, that Bitcoin is king, or is this just most altcoin people just kind of hedging their bets and selling back to Bitcoin just to buy more altcoins later?
Yeah, so I think there's a bit of both there. Now, first of all, I just think actually what we should be doing is retiring the dominance indicator. I think it's become a very misleading indicator that almost does more harm than good. And the reason for that is it's comparing apples with oranges in some ways. So if you look at some of the work by, say, Brendan Bernstein, he's come out and said cryptocurrencies are money, not equity, right? But then what's happening now is everything is just getting lumped into this overall bucket of crypto, when really the market for money is there are very strong tendencies towards the one best money, the most liquid saleable commodity. So that is the way that we should think of Bitcoin. And so the other thing is it's been used by some scammers and by people trying to pump their own narrative. They're trying to say, oh, look, Bitcoin dominance is falling because of what I'm saying. And that's why you should listen to me and fork along to my coin or to whatever other thing. And so I think it's also ignoring a lot of other important factors, such as hash power, the developer community, the decentralization of the mining, the hardness of the community who want to defend their coin and help preserve its decentralization. So yes, Bitcoin dominance is rising, but I think we should retire that measure and just really not think about it that way, because it does more harm than good. So that's how I would summarize my thoughts.
Yeah, doing more harm than good. That's interesting, because we have seen some of these crazy people talking about how, comparing market caps with Bitcoin and some of these altcoins, that makes zero sense when their markets are razor thin. I mean, you could like $1,000 can basically crash their entire market cap. And so very interesting stuff. Let's go with Kevin next and get his thoughts. Kevin, what are your thoughts on the unflippening? Like I say, is the market dominance indicator, is that a bad thing? Do we even need it? And again, are these people just going to go back into altcoins later on after Bitcoin starts soaring again?
Yeah, no, I think Stefan brought a very unique perspective as, the usefulness of this dominance index in general. I remember somebody tweeted that, I think it was coincap.io or, Shapeshift's site that kind of introduced this concept to the mainstream in crypto. And it creates this false equivalence of these different types of tokens. For example, Tether is a stable coin, and it's number 8 right now. A lot of these things are utility tokens. So it's comparing apples and oranges. But I think the underlying thing about cryptocurrencies is that they are substitute goods, not complementary goods. And I think that's where a lot of, I'm in Silicon Valley, a lot of people in tech don't understand. They go, why is this place so, divisive and tribal and whatnot? And the reason is, to Stephen's point, is that, usually when it comes to currency, there is a kind of a winner takes all network effect going on there. So I guess you can say that is a positive thing about the Bitcoin dominance index, that it kind of shows that eventually the top one will accrue the majority of the value. But yeah, I think it's something here to stay. But I think one thing is that I am questioning the dominance of coin market cap. It's the reference points. It is the selling point for all of crypto there, and it is kind of a point of centralization with single point of failure, whereas their arbitrary metrics kind of determine the strategies and the moves that people make in crypto. So yeah, I actually want to say, like, forget delete Coinbase or whatever, delete coin market cap. I mean, how do we think about that?
Interesting indeed. I mean, we do have these huge central points of failure in crypto, some of these websites. But thankfully, though, Kevin, I think we do have a bunch of competitors to CoinMarketCap, which is great. But like you say, it's true. I mean, everybody sort of just migrates to that first right now, just like they migrate to Coinbase. But there is some other alternatives to CoinMarketCap that I hope that other people start to go to and trend towards, like, for example, Coinmetrics. That's another great site as well. And some of these other sites that allow you to really show and sort by actual liquidity. So we can actually see that the there's no clothes on the emperor here. We can actually see that there's freaking nothing in these actual tokens, despite them having a really shiny, scrolly website and a high market cap. There's just no utility, there's no liquidity, and there's no actual token. There's no use case, and there's no use in in some of these tokens. So it is kind of strange to see that, but I'm glad that we do have competition. So that's really great to hear. So let's go with Nathaniel next. Nathaniel, what are your comments on the discussion so far? Like, do you agree with Kevin and Stefan that basically money tends to migrate towards a winner takes all deal? So it's almost like a language. I mean, languages tend to migrate as well. Anything that any information where we have to share, where we have to use and share to build the next thing on top of it, it seems that it would make sense if we were all speaking the same language. So what are your thoughts on this, Nathaniel?
Yes, I agree largely with these guys in terms of I think a couple things. One, the false equivalence. I think for me the biggest thing that's a problem is we're talking about when we talk about sort of Bitcoin and other cryptocurrencies that aren't trying to be money, right? We're talking about two really fundamentally different phenomena that happen to have potentially similar tech infrastructure. And frankly, even people who believe in the non-money use cases for crypto assets, crypto native assets, would, I think, argue that it hasn't been proven yet that they actually work for those functions, even if we're excited about it for the future, right? The idea of digital goods as, scarce digital goods and all this sort of stuff, right? There's a lot to get people excited about, but it's different on a fundamental level than the competition for a global sort of immutable non-state money, right? And I think actually it does disservice to everyone who's genuinely and sincerely involved on the money side or on the idea of what different ways to organize networks and different ways to organize human labor and all the other use cases that people are proposing for cryptocurrencies. It does a total disservice to just lump them all together, right? For both sides, which is something that I've always found fascinating, is that it's actually just bad for everyone, right? For these things to be totally correlated.
Totally agree there. Totally agree.
And so I think that one of the problems with the dominance index is that it's actually reflective of a larger problem, which is there's this tendency for crypto, the group of people that's involved so far, to try to patternize things very quickly, to say, like, is this like 2013? Is this like 2014? And then this happens, so we know what comes next is an alt season, right? Alt season. That's because people, what they've watched is that Bitcoin dominance gets to a certain level, people cash out some of their Bitcoin because they made enough money and they put it into other things hoping for bigger returns. Now that pattern could play out again, or it could be totally something different, right? We have, each time this industry goes through a major expansion, an entirely new set of actors get involved who potentially disrupt the apple cart of what those patterns look like. And I think putting too much stock in those things is crazy, right? So the Bitcoin dominance index, it's like fine as a way to understand the price performance or whatever of the total value of Bitcoin relative to the speculative value of everything else. But frankly, it's sort of I think that the reason that it became prominent was actually as a way to determine what happens next, as sort of a leading indicator. And I just think that that's almost always, I think from here on out, we're in new territory where it's going to be very difficult to be entirely backward looking and just assume that because this happens, then an alt season happens next or whatever, right? Like, again, I think a lot of times, even for people who are excited about other use cases of cryptocurrencies, I do not think that the idea of an alt season coming down the pike is necessarily the right thing, the thing that's most valuable, right? And I think you're seeing the emergence of a counter narrative now, which is very prominent people, even who aren't Bitcoiners, saying that like this will or won't get people excited at this point on the basis of whether people start to find real functions that are outside of money for digital native assets and crypto organized networks and things like that. It will be exciting to people once there's actual value there, right? So you have this emergence of a narrative which is fundamentally a non-speculative, which I think is really positive. So it's a long way of agreeing and adding some color to why I think the dominance index may not be serving the function that it seems to.
Yep, I agree with a lot of the points there. I mean, this is it seems to me a little bit ridiculous to again compare some of these tokens, to compare them all together, but to compare some of these tokens with each other like Bitcoin, the Bitcoin, I mean, literally the world's store of money, it just really, really falls flat on its face. But there is something to be said, though. Like, there is some positive news where, despite all of the we're being down, right? Technically, the market cap is still 11 times, what it was the start of 2017. So there is still growth in Bitcoin. There's still specifically Bitcoin. There's still a lot of growth in Bitcoin. I try to tweet about all the stuff that's happening in Bitcoin. There's just so much when it comes to privacy, when it comes to Lightning, when it comes to technology. But I don't see a whole lot of this information coming out of other teams, out of other ICOs, out of other things. And of course, you can't pay attention to everything, of course. But still, like, I still continue to see the bulk of the innovation happening on Bitcoin. And again, Bitcoin still remains the only real safe haven. I think that this shows that Bitcoin, this dominance at least shows that Bitcoin still is the only real safe haven that investors can actually flock to, because if something if you would have just held Bitcoin during this whole craziness, you would have actually done better than investing in all of these different alts. So let's see if anybody has any final comments on this topic before we go. Kevin, any final?
I do. Well, let me ask, first off, what are our real intentions regarding, warning people of scams and whatnot? Is it self-interest, or do we really care about noobs and whatnot? And I think that's a honest question to ask, because I think most of it is self-interest. Most of it is self-interest, that we want Bitcoin to be as high as possible. Therefore, we want to inform the market. Because honestly, if I really was smart, I would say nothing, and then just accumulate cheap Bitcoin for as long as possible. And then eventually the fundamentals will reveal themselves, and then, everybody else will get wrecked, as opposed to, warning the market early and allowing noobs to understand this faster. But then second, I think that there is a learning curve for everybody, right? So then for me, I got into Bitcoin, and then I was just testing theses, and I did play around with shitcoins for a while, and I did accumulate more Bitcoins doing that. And I asked myself, am I being a hypocrite by ostracizing noobs that are got into 2016 or 2017, because I've been in here since 2013. I've been here for 5 years, and it took me a while to understand these fundamentals, and I'm kind of ostracizing people for not getting it immediately. So I ask you if that's fair. Maybe should I take a different approach, or to say, hey, you know what, play with the shit coins. I'm going to tell you now, but eventually you're going to get wrecked, and you're going to find your way back. So I think understanding, what is our true intentions, and then once you kind of understand your intentions, I think you'll go about educating in a better way. And then second, it's I think we all agree that the main primary use case of shitcoins is to accumulate more Bitcoin. I think like people like Charles Hoskinson, or like other like scammers, they know exactly what they're doing. I think Daniel Krawietz, Daniel Krawietz and Hyper-Bitcoinization, or Pierre Rochard from the Nakamoto Institute, they called all this. They said that this is a once-in-a-lifetime wealth transfer paradigm shift, and people are going to lie, cheat, and probably literally kill in order to accumulate Bitcoin. Because this is a once in a couple millennia shift. So they predicted that people are going to generate all these scams. So it's somewhat expected until the market and the entire world comes to consensus that Bitcoin is it. These scams are going to they're going to persist, and they kind of slow down Bitcoin's adoption. So as a Bitcoiner, I've kind of gotten annoyed with myself with how much talking that we do. And maybe we should be building things that allow people to learn, or provide people in value in ways to maybe earn Bitcoin or something like that, so they don't have to engage in creating shitcoins. But the thing is, it's the low-hanging fruit, right? So basically, people try to mine in the early days to accumulate Bitcoin. That got way too competitive and too efficient, so people stopped doing that. And then people started, okay, what's the next low hanging fruit? And then that's, doing, a copy paste of Bitcoin, like Litecoin or something like that to, accumulate more Bitcoin and then sell, and then get hired at Coinbase and then get it listed and then sell at the top and then, leave. And then after that, it's, pre-mines and tokens and ERC20 tokens. So that's the thing is that, Bitcoin is, a once in a lifetime wealth transfer. And then people are, steadily working their way up the low hanging fruit until that market gets hyper efficient and too competitive, and then they go on to the next thing. So one thing it is undesirable, but it is not unexpected that people are going to continually try to find easier ways to get Bitcoin as the mining market gets more saturated, and then eventually, right, if there is unnatural profits or arbitrage profits to be made, eventually those profits are going to be competed away, and then people will have to move on to the next thing. So I think eventually that this shitcoin trading market, all the hedge funds are going to get in, and then all the easy profits are going to be competed away, and then basically everybody's going to move to the next paradigm, which I believe is earning Bitcoin. Yep.
Great points. I try to remind people that it is early days, but that's the great thing about Bitcoin is that the intentions, right? The incentives for Bitcoin are built in such a way that everybody can act and should act in their own self-interest, which actually helps the system, right? So acting.
True. That's beautiful. Yeah. To your point, I've made this argument that Bitcoiners do a better job of self-regulation than a corrupt or a lobby or a government regulatory arm that is vulnerable to capture by the likes of the funders of Coin Center or Coinbase, right? So then basically because we know the fundamental truths and the economic truths for it, out of our self-interest, we are financially incentivized to educate and to regulate scammers out of our own financial interests. So my thing is that, I think the reason why there's not like a $2 trillion, bubble like in .com was because of Bitcoiners and their financial interests to reveal people the truth. Right. So
it could have gotten way out of hand. I mean,
the
ICO could have literally, people were talking about how the ICOs could have literally eaten all of the capital on Wall Street at some point.
Yeah. So instead of relying on the SEC, who are either bought or incompetent, or they just do not have the resources to handle a distributed economic activity, that Bitcoiners are self-regulating the system themselves. That's why I say it's like it's like white blood cells, and we see viruses or whatnot, and then in order to protect the integrity of the system, we are attacking scammers and whatnot, and basically weeding those people out and improving the immune system of Bitcoin and crypto. So I think this is anarchy in action, crypto anarchy in action, or free markets in action, to where we are incentivized to reveal scams and whatnot out of our own self-interest. And that's a scalable, sustainable way. So, if anybody in the SEC is watching, I was like, you know what? We don't need you guys. We're doing a better job at this anyway. So I'm not going to fucking go lobby you. I'm not going to go send you $1 million, or, hire some SEC director at my company, because, I know what happens there. And that's why I think everybody thinks like I'm some type of fundamentalist or absolutist, or I'm too theoretical or whatnot. But then I was like, dude, like I helped with a paper sign, help get a major bank CEO fired from his job and returning his bonus for fighting the people. Something that didn't happen in 2008. Something that like hundreds of thousands of people during Occupy Wall Street who literally sat on the floor and yelled like children, right? And this thing is Ethereum is security. This is me engaging in self-regulation without the use of coercion or violence or the threat of imprisonment or whatnot through people say trolling or shit posting, but really what I'm doing is I'm educating and I'm informing the market.
Yeah, and I think that's important. I mean, because education at the end of the day, this is what is going to allow us to self-regulate. This is what's going to allow us to evolve. And so I do try to, tell people to, like you say, Kevin, maybe we should all just a little bit less trolling and a little bit more education, like incentive.
But then here's the thing. It's that education needs to be it needs to be entertaining, right? And the reason why trolls are effective is because they're funny, right? And then why is something funny? Something is funny. It's funny because it's true, right? So really, the fact that trolling and shitposting and making fun of one another, the fact that it's entertaining means there's something truth behind it. And they say things like the left can't meme, or I say the Ethereum community can't meme. And the reason why is they're not that smart and they don't have a real good grasp on the truth. You need to know the truth in order to be funny. So I would say that trolling is education. It's very effective education, right? Because we go viral, right? If we have like some boring ass, whiteboard, thing talking about, like the fundamentals of money.
And we don't want to go, too far down this rabbit hole because I do want to hear from the other guests. But again, I think, Kevin, we proved what you're saying is true last year with the user activated soft fork. I think that some people were calling it, just putting tags on people's names and things like that. But I think it was far more powerful than that.
A UASF hat, that's education. This, is education. Right. So yeah, we are taking it on ourselves to educate and regulate and inform the market. So I think it's a great thing. And it's a validation of anarchy and free markets.
I think it's far. Yeah, I absolutely agree. I think it's far more than what people think is just putting, tags on people's names and things like that. It's far more than virtue signaling. That's what I want to get across. It's just far more than virtue signaling. So let's get the other panelists' comments in here. Stefan, what are your comments on the discussion so far before we move on to the next topic?
Oh, look, yeah, not a great amount to add here. I think I broadly agree with the comments before. Happy to cede the rest of the time on this point and move on for the other points.
Yeah, I think, well, Stefan, I think you're a great example of the education, right? Again, like I think we're all here great. I think all of us here are great examples of self-regulation and education. Stefan, you have an amazing, podcast, and Nathaniel, of course, has your tweet wrap-ups that are invaluable to many, many people. I definitely really find them useful for myself. And then, of course, Kevin has done an insane amount of education, not just in the crypto space, but even outside of the crypto space prior to that with Wells Fargo. So I just, I see us all here as educators. So that's really important. And I think that people understand the importance of that. This is how we self-regulate. This is how we educate. This is how we grow an ethos, right? A grassroots led organization. So let's go with Nathaniel. Did you have any final comments on this topic before we move on?
No. I mean, I think when we've never had an experiment in like free markets with open communication with stakes this high before, right? Like, and it's going to take a lot of weird twists and turns. And frankly, I think that it's going to take all types. I think the thing that's cool that's happening now is that you're seeing the development of a complete stack of information and education and resourcing and whatever you want to call it around Bitcoin and crypto more broadly, where people are finding the right role for them, right? Like I've never been the sort of flamethrower type, right? But you need that to get things going, right? What's good is that, man, that dust gets kicked up and people are like, well, then what the fuck am I supposed to think? And what am I supposed to feel? It's like, well, I read 300 articles. Here's the ones that you should read to think and figure out how to feel, right? Like it actually is, there's kind of a symbiotic thing. And I think that even one of the things that I often find when I'm doing these like long read Sunday threads is that, sometimes it's the people who have written like a long thread or there's a great Medium post or there's a great podcast or whatever. A lot of times I'll actually flag the point in a discussion on Twitter and something that started as like a shit post that turned into this really long thing. And usually the criteria for that to happen is that all of the parties involved are willing to let it transition from like, a fun sort of irreverent shit posting thing into a real discussion. When people do that, really cool stuff happens, no matter what side people are coming from. And you can actually see people learning and engaging. And, I think that's some of my favorite stuff to discover on Twitter is that, things that accidentally become educational in spite of themselves because there's so much that people are thinking about going on there. So I don't know. I think it's surprising for people who are new to the space to see the intensity of passion and the sort of intensity of feelings that people have. But once you kind of like get strapped in and get comfortable with it, there's just so much to learn, from every side.
Absolutely. And yeah, it's just important to understand that, the people that kick up dust, they are absolutely important. This is how the conversations get started. Because if we didn't have that, then of course we would just have complacency, and that's not good for anybody. So I think we speaking of, real quick before we move on to the next topic. Speaking of education, we have Shinobi in the chat. So Block Digest is another YouTube channel that tries to educate people, and so I think there's just so many out there now. It's just really, really great. I almost call it the golden age of podcasts right now. So check out that when you guys get a chance. But so I think we can move on now to the next topic here: stablecoins. So this should be pretty interesting. Stablecoins now have been trending in the news a lot, but I want to ask the panelists, like, really, how important are they? Because, we have Tether now. We had Tether. That was the first. We've had Tether. Then we had TrueUSD, Carbon, Maker. There's all of these ones. Goldman Sachs is getting in on the game. So I want to know from the panelists, how important are these things? So let's ask. Let's go with Kevin first on this. Kevin, what is your take on these stablecoins? Are they important? I mean, are they just an on-ramp to get more liquidity into the system and eventually will die out? What are your comments on these? Because they seem to be all the rage right now.
Yeah, to be honest, I don't really care too much or follow them too much. But yeah, I think I agree with you. It is just another transitionary tool to get people into crypto, just like fiat exchanges and whatnot. And I guess I'm more supportive of the actual stable coins that just custody the dollars or whatever fiat currency that you're trying to create the stable coin for, and then just issue the token on top of Bitcoin or Ethereum, as opposed to these other ones where they engage in all these crazy kind of like hedging strategies that don't really pass my sniff test. Yeah, I mean there's demand for them. So I mean, I think that's what I've kind of learned as a Bitcoiner. I'm not a entrepreneur. I don't have a product right now, and that's the thing. It's that it's that conflict between pure ideology and what is the market demand in the moment. And there's market demand for stable coins. So unless Bitcoin gets way more 1,000 X's and becomes super stable now, then there's going to be demand for it.
Yeah, and I just it seems that there is a demand for this, and I think it's really stemming in a lack of education, like we were talking about. Some of these people think that these stable coins are the holy grail, that they can combine all the properties of a decentralized currency and a stable fiat currency into one. Just feels really nonsensical, and like you say, Kevin, I don't think passes a single sniff test that I can come up with. So very, very strange. Did you want to comment more, Kevin, or should I?
Oh no.
Okay, cool. Yeah.
I'm interested in hearing what Stephen has to say. Actually.
Absolutely, yeah. Let's go, Stefan. Stefan, what are your comments on this? Because again, we have so many of these now, and personally, I don't think that they're really super important in the long run, but there is demand for them now. What are your comments on all these stable coins, Stefan?
Yep, sure. So a few things. I agree with Kevin. They are really a temporary measure to be used by traders who want to trade around across different exchanges. And it's, as we're saying, it's a temporary measure that people will use because they need a way to get the fiat leg on the other side, right? Because the crypto part is easy. It's the fiat part on the other side in some other country or some other exchange, which is difficult. Now, I think I agree also with Kevin's comment that the fiat-backed stable coins are much more, quote unquote, safe than the crypto ones or the algorithmic ones. However, there is an underlying economic fallacy behind all of these stable coins. And that, in my view, is this whole idea of monetary stability. There can be no monetary stability. And this is a point that if you read in like some of the Austrian books, such as Ludwig von Mises, Huerta de Soto, or some of the work by Roger Garrison, they have spelled out that really money is not a stable thing to begin with. It's not like it's a ruler. It's not like a 1 meter ruler that you can always use. It is something that itself, the demand for money fluctuates based on how certain or uncertain we feel about the future, right? If you were totally certain about the future, you might go and buy exactly everything you needed right away, and you wouldn't need to keep as much money. But because we're human and we face uncertainty, we keep some level of monetary balance. And so it's kind of basically what I'm trying to explain here is that it's turtles all the way down, right? Like we have this kind of absurd fantasy that the US dollar or whatever other money can be stable when no such thing can exist. And because all of these Tether and all these other ones, they're based on some kind of US dollar or some kind of fiat. And so we're going to see some of that instability come out in like these kind of black swan type events. So, but I mean, like I said, I understand the reason for them. There is a market need for them. So that's kind of, I accept that they will exist, but I'm not that bullish on them.
Yep. Yeah, and I think we're all in agreement then that they are just temporary measures, and really like the point about the fact that there can be no monetary stability. Guys, it doesn't exist. The US dollar is not stable, okay? It has lost 97% of its purchasing power to precious metals over the past century. It is the opposite of stable. Now, of course, we have the illusion of these things like you say, Stefan, but it's turtles all the way down. Yes, we have the illusion that a gallon of milk tomorrow will be the same price it is today, but that is not going to just not going to be the case. It's not built into the universe that has to happen. Okay, it's what's built into the universe is that is going to be a completely different price the next day. We have our lives are themselves are uncertainty, and this is how it is meant to be. We're not supposed to know the future so that we can learn the lessons here today. This is what's really important. All of these stable coins have huge risk. The whole point of them being a holy grail is that they don't have any of the risk, but they have huge risk. And there's a few different kinds of them now. We got the fiat pegged, which of course has risk, the crypto backed with collateralization, and then you have these, as Stefan mentioned, these algo backed stability coins that literally attempt to use these algorithms to stabilize the coin. And if it gets to be too valuable, it prints more coins. I mean, seriously, like that is to me just insanity. Again, just to trying to tweak all of these parameters constantly to try to come up with stability. I think that is going to be, I think it's going to fall right on its face. So let's go with Nathaniel. Get your opinions on this, on the stable coins. What do you think, man? Do you agree with the panelists, with the panel so far, or what are your thoughts?
So I think a couple things bringing up previous parts of our conversation. So first is, I think a useful heuristic, a useful question for literally any time you're talking about anything, especially if it has a coin attached to it, is, are we talking about this in the context of its likelihood to become global money and global digital reserve currency, or are we talking about this in some other context, right? So stable coins, there is a stable coin thesis that says a stable coin will be a global digital reserve currency. That's one of the paths available, right? If you look at store of value, medium of exchange, right? Like that's one thing entirely. I think that people are kind of off that. I don't think that that's what most people are talking about when they're talking about stable coins. Now, I could be wrong. I think it's the least popular of the theses. I think it's the most sort of silly of them. So then you get back into the short-term thing. But anyways, the point of point one is that like, it's really important to define the terms in which we're discussing things because it really changes things, right? So stablecoin as a viable path to long-term global reserve currency seems way outside of something that I'm interested in. The short-term use case. So I think that the thing that's interesting to me about stablecoins is more the question of on what time horizon are we interested in stability, right? And so the thing I think that's valuable about something that's specifically designed to be short-term stable is when you have functions, and this is, by the way, this is a product of the system that we live in now. This could change in 5 years, whatever. But when you really need things to be the same price that they are paid when they're resolved, however long later, right? So for use cases like payments, at stores and all this sort of things, right? Like there's obvious reasons why I think stablecoins have a useful role to play in just the broadening of sort of a global digital money outside of just storing value. And I think that that's really valuable. I think that they can be a really interesting, useful, symbiotic piece to this pie in the short term. But then I think there's one other interesting point, which again connects back to the other part of the conversation, which is self-regulation. So that if for anyone who pays attention to me, a lot of what I pay attention to is market narratives and how they shape the flows of what we're talking about becomes what we do. Thoughts become things, right? And so one of the things that's really fascinating me right now about the stablecoin conversation is that just as the numbers of projects are increasing, so is the volume of skepticism, like critique, like thoughtful, and it's not being received as, oh, it's just those haters again, it's just fudsters or anything like that. I feel like it's much more balanced in terms of people are like, yeah, stablecoins, maybe they have a role, right? But there's not, like, it would be very surprising to me to see a wave of new retail investors, for example, come in and get excited about stablecoins. And I think part of that may be the fact that we've been through a cycle of sort of narrative critique that allows people, but basically it's being stopped before it gets off the ground as a cure-all for everything, as another panacea. So I think that's a really positive sign just in terms of the community self-regulation.
Exactly. Stablecoins are not a panacea. they're not here to save all of crypto, nor can they. So great points on that, Nathaniel. You know, it's funny because everybody wants stability, right? Everybody wants everything to be okay all the time, but unfortunately, that's just not how life happens. And again, great points about, you know, trying to make take the context of this, like what is the actual angles here of the stablecoin, and as you mentioned, the one being a store of value. Wow, that is a global store of value. Wow, that is definitely outside of my belief, for sure. As again, if the actual premise of it is to peg to another currency, basically. So how could this stablecoin become the world reserve currency that and not the fiat that it's pegged to? Just crazy, crazy talk, crazy questions. Lots of stuff to discuss. In these early days, but personally, I believe that, I guess like the rest of the panel believes, that they are going to just be here short term to provide a couple of very specific market needs, and you know, for the most part, be left alone when we don't need them anymore. So great points, everybody. Really having a good conversation so far. Stefan, did you have anything else to add before we close out? No? Okay, cool. So we can go to the final topic then here today, ladies and gentlemen. Before we do that, but please, if you could like what you're seeing, hit the thumbs up and share out the show. If you guys are new, please hit the subscribe button. We really appreciate it. And if you guys are listening to the audio version, definitely give us a review in iTunes. We would love it if you guys could do that. It helps us get into more people's feeds and all that good stuff. So thanks again, everybody, for joining us. We have over 100 live viewers right now, so we're having a good time. The chat's having a good time. Let's keep it rolling with this final topic. So Morgan Stanley and Citigroup, among many others, are creating financial products for Bitcoin. And so I want to ask the panelists if we have entered or begin entering the institutional investor phase, you know, for Bitcoin and crypto in general. So let's go with Nathaniel first on this one, since we went with everybody else first last time. Let's go with Nathaniel first. Nathaniel, what are your thoughts on this? Because we see all these things like, you know, Morgan Stanley, you know, creating these swaps. We see all this interest from Wall Street. So have we officially entered like the Wall Street institutional phase yet?
I think quietly we've been there for coming up on a year, right? So I think that the interesting thing about this is that all of these institutions, if you look at them from the standpoint of where their interests lie, they have no reason to want to trigger another bull run right now, right? Like the best case scenario in the world for them is that like things remain relatively stable, right? That there's like enough news that people get excited and they kind of stay involved. The price that continues to maybe trend downward but doesn't tank, right? Like I think that there's the best case scenario for any institution who's interested in Bitcoin right now is having as much time to get their strategy prepared, to figure out what they want to do with it, to figure out which regulatory buttons they can push on to get an advantage and find alpha, right? To figure out like how they hire, right? There's literally no incentive for people to sort of signal the starting gun of a big institutional flood of capital in. However, I think that, my general belief is that we're in it, but the first part of the institutional phase of Bitcoin or crypto. Sorry, I'm on a phone.
No problem. Keep going, Nathaniel.
I think that the first part of the institutional phase is actually about the sort of planning and plotting and whatever, right? And I think that what that means is that I find it, so every time there's like another ETF approval timeline thing that comes up, and this is again holding aside entirely the critique, which is a really important discussion or an interesting discussion about what these sort of financial derivative products do to the Bitcoin network as a whole and whether they're valuable, yada yada yada. Holding that aside, there's always sort of a moment where people are like, okay, is this going to be the time when an ETF gets improved, and that sets off the whole market? I kind of think that. I don't know. It feels to me like we're going to be circling around the bottom of this market, at the bottom of the price of Bitcoin for a very long time, because I do believe that the next big influx of capital will be from institutions. And I wouldn't characterize them as like waiting on the sidelines. I would characterize them as like taking as much time as they possibly can before they have to go all in on doing so. I think that the crazy thing is that's going to mean a crazy radical recorrection back up once that actually happens. So it could feel like very long and extended, but then it's going to be a crazy tear So my short answer is that I think we're already in it. I think this is just what the beginning phase of institutionalization, or the institutional era, it's a much better word than institutionalization of Bitcoin and crypto look like.
Yeah, great answer, Nathaniel. And I do want to get into a little bit of the problems with the actual financialization of Bitcoin, because again, we all understand that it's an inevitability, right? So I do want to maybe discuss some of the problems if we get a chance to after we ask everybody about this. But let's go with Stefan next. Stefan, so what are your comments on this? Have we then entered the institutional phase? Have we already been there for a while? Because it does. I really like what Nathaniel said, where he said no one wants to trigger the next bull run, right? Like no one wants to get, not just quite yet. I mean, we still have to accumulate. Everybody's accumulating. If anything, it's a bit of an accumulation phase. But what are your thoughts on what Nathaniel said? Have we already been in there? And if so, maybe what are your thoughts on what could trigger the next bull rally, or what could trigger maybe more or the rest of the institutional investors coming in?
Yeah, so I agreed very much with the comments by Nathaniel there. I think, you probably said it better than I could. I think we are seeing over time gradual institutions coming into Bitcoin. A couple points I would make on top of that are that, one, I think I like the way Nick Carter put it in one of his articles, Visions of Bitcoin. One of the points he made was that there's this whole class of institutional investors who don't necessarily want Bitcoin. They want Bitcoin flavored risk and returns, obviously. So that is one angle that we're seeing. I think in terms of these specific articles, the Morgan Stanley and Citigroup news, I think from what I've read of them, of these articles, they don't seem as much about directly holding, your private keys. It's not as in line with the Bitcoin ethos. So arguably the backed news is probably a little bit more relevant, because that relates more specifically to owning the physical Bitcoin and holding the keys for them in a custodial sense. So I think they're probably the key points I would say. Oh, and last point I would say is just that we can't be too eager for these things to happen. It's just going to have to take time. It's, sometimes it's not that there's any one particular thing that triggers it off. It's just time. People need time to get comfortable with Bitcoin, time to understand how it works, how to secure it. And then over time, once they sort of realize that thesis of the stock to flow of Bitcoin being much hard, Bitcoin being much harder as a money, well, then that's when a lot more money will come in.
Yeah, great point, Stefan. We don't want to get too eager, and again, we don't want to trigger the next bull run too early, or else we'll just have some crazy parabolic, run with a correction that's just way crazier than it could have been. It could have been it's hopefully going to be a nicer correction than if the longer we wait. And again, Tone Vay says this too. The longer we wait to go down, the more violent it's going to go down, if it ever in fact does go down, right? So it is a patience and a waiting game for a lot of this stuff. But I want to get Kevin's thoughts on this as well, because like Stefan said, most of these articles, most of this news today is in fact mostly talking about synthetic, right? Synthetic underlying, not the physical underlying. So it's synthetic exposure to the performance of Bitcoin, but not actually holding Bitcoin. So let me ask you, Kevin, do you think that people like Caitlin Long out there are doing the right thing by sounding the drum that, hey, some of this financialization of Bitcoin is probably going to go awry, especially as we're seeing with all of these things just trying to do synthetic, except for backed, which is the only physical underlying. Do you think that there's a huge danger with this, Kevin? And if there is, do you think Bitcoin can survive this?
Well, if it can't survive this, then you have to ask the question: is Bitcoin meant to survive? Right. So that's the thing there. I mean, I came from traditional finance, and it makes sense. This is the most kind of risk balanced, or the most prudentially risky or risk optimized way to get exposure to crypto without actually holding the underlying asset. So I guess that makes sense. Regarding, is this, the institutional moment or whatnot? People on Wall Street aren't stupid. If they are trying to, actually hold physical Bitcoin, they're going to, shake out and wreck a lot of, weak hands. So, that is going to be expected. But honestly, I think I've been very consistent. Is that I don't really give a shit what Wall Street and institutional investors do. Honestly, like I don't really give a shit. Like an ETF to me, that's not like financial innovation. My thing is that Bitcoiners keep on building. We build for ourselves. We have problems that we build for our own community, and build for the unbanked. Look, hearing about people being able to feed their family in Venezuela, that's what gets me up about Bitcoin. Like I don't give a shit if some fund manager or some guy getting paid $10 million bonuses is getting rich off of derivatives or fees from an ETF. I can honestly give a shit if Wall Street wants to join now or later. I really don't care. I'm not waiting for them. And Bitcoiners are still gonna we're just gonna keep on doing our thing, and Wall Street or regulators or institutions, they're going to adapt to the way that we do things. We're not going to try to adapt to what they want to do. And to me, all those people you're trying to adapt. They have short time preference, or their incentives are here just to get rich. They don't really care about the ethos of Bitcoin.
Yep, and that's what we've seen too, especially even trying to create some kind of instrument where it's not the physical underlying. It just clearly shows the intentions. Because again, this is what Wall Street does, right? As you're more familiar with than all of us, I think, Kevin. They just continue to create derivatives after derivatives, financial instruments after financial instruments, synthetics after synthetics, and it's just all turtles all the way down. And again, I think this stuff doesn't come, doesn't cause the actual crash. It doesn't come, to fruition until somebody figures it out, right? Until somebody starts looking, just like with the last financial crisis, it kept going until somebody started looking, right? Somebody finally started looking at the underlying asset, realizing it was trash. And so these things can go for a while, years, in fact, before crashing. So I just want to make sure that we get this information out now. I do believe that the financialization of Bitcoin is important overall to Bitcoin's just overall liquidity, like to Bitcoin, taking over the world. Essentially, it is going to have to eventually take over Wall Street. It is going to have to take over all that stuff. And in my opinion, to take over all that stuff, that is the financialization of Bitcoin. That is basically Bitcoin essentially taking over Wall Street. Because again, Wall Street wants Bitcoin, but Bitcoin doesn't need Wall Street. It's going to, as you say, Kevin, we're going to continue to keep innovating, continue to keep building. There is so much innovation in the space that I can't even keep up with it. Like this is my full-time job pretty much. And I can't keep up with all of the stuff that people are doing, both with privacy, with Lightning. It's getting really, really crazy. And that is not going to stop. That is only going to continue to accelerate. So it sounds like Wall Street's going to do what Wall Street wants to do, right? They're going to keep doing what they're going to do. Nobody's going to stop them from doing that. But Bitcoin will continue to grow. And at some point, somebody is going to have to want the underlying physical more than anything else. And that is where the underlying demand of hodlers, that's where this underlying layer of hodlers will always be supported, because Bitcoin, can never crash fully because of the belief system, because of the ethos inherent to it from people, instilled, I think, by people like Kevin and others out there in the community, that this is a limited asset. This is a new asset class. This is something that can't be controlled. And the people that are going to be in charge of it now is the individual, not Wall Street.
Yeah. No, I mean, I think some Bitcoiners still like suffer from, they need validation, or like they have like daddy issues where they have to go through the authorities or the professionals or the regulators or whatever, and to get validation for Bitcoin. It's like I don't need validation from the corrupt system, the inefficient system that Bitcoin was meant to replace. So to me, when I hear people, it's like, oh, institutions are coming, I was like, well, these are the institutions that we're meant to disrupt. So why are you so happy about them coming? And basically, when I see that, the tell that I see is this person, it doesn't understand what the mission is. They're just here to get rich. So that's kind of a tell to me. But also, like, what about fucking permissionless innovation do you not fucking understand? Like, we submitted our proposal when we're waiting 2 years, and there's comments and back. It's like that defeats the whole ethos. Is that the beautiful thing about Bitcoin is that we don't have to ask anybody to build these new products. So to me, it's just like when people were like, this reminds me of when the .com boom, and then people were like, oh yeah, we're partnering with AOL, Time Warner, or whatever. We're putting or big web newspapers on websites and stuff. And basically, they didn't really have a real vision of what are the things that could not exist that can now exist because of this technology. And they were trying to probably plug the square square of the old model into the circle of the new technology. So yeah, this stuff that reminds me of just people putting a newspaper on a website back in the early internet days. It's nothing. It's not innovative to me. So it's the things that you don't have to ask permission for, that we can create on our own without asking for the permission of the legacy players. That's what gets me excited. So once again, I honestly don't give a shit what institutional countries are doing.
Yeah, well, to me personally, I just don't see any financial innovation in Wall Street for decades and decades. I think personally, the last innovation was probably the credit card, and that's really about it. It's just, but it's also important to remember, as the chat says, it's important to remember not everybody wants this personal responsibility. Not everybody wants to hold their own keys, and of course, there'll always be somebody to hold your hand for that. And guess what? Those companies will, control you. They're going to KYC you. They're going to go under. They're going to get bailed out. And they're going to cause more issues. So if you want to support that, that's your choice. But of course, there'll always be people like myself, Kevin, and others educating those to hold their own keys, to be their own bank, and to take personal responsibility very serious. So very, very cool, Kevin. Does anybody have any final points on this, Stefan or Nathaniel? Nope. No, okay, cool. All right, well, great. That was, I think, I had a great time, guys. This was a great conversation. We went about an hour there. That's what I like to try to keep it as. So I want to thank everybody. Especially my panelists. Want to thank everybody for joining us today on this Sunday. We know you guys are busy. We know you guys got other things to do, but we really, really appreciate you guys coming on the show and educating others, because I think this is just an important thing to do, guys. We are such early days, and you guys are in the industry, just in the industry thick. So I really, really appreciate the time. And again, thank the chat. We had a great conversation in there. Lots of good points made in there. And we had some people joining us. Had Shinobi joining us there from Black Digest, and some other people. Corey, of course, in there from behind the scenes there as well. We really, really, really appreciate everybody joining. And so let's just say goodbye to our panelists and ask them where we can find out more information about them. Stefan, where can we find out more information about you, sir?
Yeah, guys, so you can find me on my website, stefanlivera.com. My Twitter is @StefanLivera. And yeah, I guess my main product that I shill is my podcast. So, basically it's an educational podcast. It's primarily about Bitcoin. I approach it mostly from an Austrian economics angle, and I get some pretty good guests on there. Some of my recent guests, Vortex was one of my guests, and I've recently had Samson Mo of Blockstream and Jimmy Song just recently. So keep an eye out for that. Thanks, guys. Yeah.
Really, really enjoyed the Samson Mao one, particularly, of course, because of his all the facts that he brought up about the Bitmain IPO and that kind of good stuff. So that was really, really fun. Definitely encourage everybody to check out Stefan's podcast. Again, he's interviews pretty much almost everybody in the space at this point. So lots of great insights and interviews. Very, very timely. Mr. Nathaniel, where can we find out more about you, Nathaniel Whitmore?
I'm easy. I'm on Twitter @NLW. And that's sort of the hub for me. That's where I do everything. I have a website too, but it's linked from Twitter. And it's really mostly just permalinks of things that happen on Twitter. So yeah, that's where to find me. And thanks so much for having me on the show. I think this is great. I think as someone who's watching the sort of media and education evolve in the space, I think you're going to see a lot more of this sort of live, real-time discussion. I think it's different even than the great podcasts out there. So I was excited to be part of it.
Awesome. Thanks so much, Nathaniel. We really appreciate your tweet storms, man. Your recaps of crypto Twitter. Again, guys, today was no exception. He does them every Sunday. He has another one out today, so make sure you check that out. Lots of great information, lots of great links. Again, whether you like Bitcoin or Ethereum or whatever, he does tend to cover the whole space. So lots of great information. In fact, I just in that tweet storm, I believe I saw the article about the energy just recently.
That was one of the big ones this week. Yeah. I think we could have a whole hour-long conversation just about that. Oh, yeah. So definitely check it out. And
thanks so much for that. So Dan Hedl is the name who created that article, and I'll hopefully we'll have Dan on the show. I reached out to him, and I really would love to interview him about his findings and research about Bitcoin's energy use. So very, very cool, Nathaniel. Thank you so much for that. And finally, Mr. Kevin Pham. I mean, who the heck doesn't know where to find you by now, Kevin? But man, why don't you just tell everybody where can we find out more about you?
Yeah, so if you are not following me, you're missing out. All right, so main place is Twitter @_Kevin_Pham. And I gotta talk about what I'm shilling, right?
Yes, I always gotta shill. I always be shilling.
Oh yeah. So then I'm gonna shill this T-shirt. So if you want to take on your responsibility to educate your local community, put skin in the game, hold Bitcoin, short Ethereum or whatever, and buy my shirt. And, you can trigger people in real life and be disagreeable and have real conversations as opposed to, having this kind of fake kind of San Francisco fakeness going on. I just had a second point is that, this reminds me of, remember those around the horn shows or on ESPN? This is what this reminds me. It's like around the horn for, financial or crypto, which is kind of cool because it's a permissionless system where it's, you don't have, the head of the Fed on or some person from like a big bank. It could just be, normal people like us. And another observation that I'm having is that I was very impressed. I always felt outclassed by Nathaniel and Stefan there. But one thing I'm noticing is that the talent level is going to keep on rising in Bitcoin. It's going to get more professional as Bitcoin grows and people, very established or very talented people from other industries join. So what's going to happen is that, we've seen it on the developer side with some developers getting, kicked to the curb or companies being, kicked to the curb. As far as, being a Bitcoiner or crypto Twitter personality, the quality level is going to keep on increasing. And that's something to look out for. So, if you don't stick on your loyals, if you're known as influencer, stay on top of that. But also another thing, I think I have this ununique view is that I don't look for other promising, crypto shitcoin projects. I look for promising Bitcoin talent that is undiscovered. So if somebody says something like very, insightful or intelligent on Twitter, I take it on myself to promote it. And that's also rational self-interest again. So Nathaniel, Stefan, I think you guys are super talented, and just let me know how I can help you guys be successful.
Absolutely. Thanks, Kevin, so much, man. Again, guys, you guys need to check out Kevin's shirt. Definitely need to check it out. Definitely need to buy a copy of your own so that you can have the same power that Kevin has with trolling people. No, I love it, Kevin, man. This is great, man. Triggering people in real life. That's what it's all about. That's basically, that would be my middle name if it could be. So I really, really appreciate the kind words, Kevin. This is a roundtable show where I do try to get people from within the community that I believe have Bitcoin's best interests at heart. And so I do try to share the knowledge there. And again, just try to push the information about Bitcoin. So thank you so much, guys. Thank you, everybody. And Kevin had a great point, guys. Look, Bitcoiners are going to continue getting more intelligent, more wealthy, and therefore have more influence. So you best be nice to them in the future. So thanks again, everybody, so much for joining. Really, really appreciate it. We will be back again, of course, next Sunday, right here on the CryptoCast Network. We have a bunch of shows planned for next week, so make sure you follow at CryptoCastNet. Follow us, and we just have so much more to show you guys. So until next time, guys, keep talking Bitcoin. We'll see you later, and buy one of Kevin's shirts. See you guys later.